Hey everyone, welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. So as you can see, I'm already here on a SEC filing that was filed by Tesla back in 2018 because I do want to start this video with an explanation on everything that's happened with the Delaware case, with the ruling, with what's going to happen afterwards. Of course, what's going to happen afterwards, these are just my assumptions and opinions, can be completely wrong. After that, we're going to have a look at numbers out of China, out of Europe, valuation metrics for Tesla, and at the end, as always, the graph. So let me first start with this. This is a letter to Tesla stockholders. Basically talks about that new plan, that new compensation plan that Elon was about to get after shareholder approval. So they say here, as Tesla continues to grow, we have created a new 10-year performance award for Elon that incentivizes him to not only continue to lead Tesla over the long term, but to help the company achieve these great goals. You will find more details about the proposed award in the following pages, but the basic premise is simple. Elon's compensation will be 100% aligned with the interest of stockholders. Let me repeat it. Elon's compensation will be 100% aligned with the interest of stockholders. They continue by saying, the award consists of stock options that vest only if Tesla achieves specific milestones, which, if fully achieved, would make Tesla one of the most valuable companies in the world with a market capitalization of at least $650 billion, more than 10x the value of Tesla back then. They created the award after more than 6 months of careful analysis with a leading independent compensation consultant, as well as discussion with Elon, who, along with Kimball, his brother, otherwise recused themselves from the board process. It's very important because of what the judge has said. Now, last thing here, by linking Elon's compensation entirely to Tesla's performance so that he does not receive any compensation unless all our stockholders benefit from significant value creation, the new performance award will similarly ensure that Elon and the team are totally aligned with stockholder interest going forward. So, again, the compensation package, we've talked about a new compensation package after what Elon Musk has said, that he wants 25% of voting controls, blah, blah, blah. We've talked about that already. And I've explained why it makes sense, why it's a win-win. One, you retain Elon and all the talent that works at Tesla thanks to Elon, thanks to his ideas, innovation, whatnot. Plus, every time they reach a new milestone, he gets paid. He doesn't get a salary, by the way. He gets paid through the compensation here, but he only gets paid when the company achieves certain milestones, which means me as a shareholder also gains from that, because that means that my shares are probably worth more than they were before. And this is exactly what has happened here. The compensations are linked to the achievements. Now, of course, Elon Musk was not happy with the ruling, and so he went on X, put out a poll, should Tesla change its state of incorporation to Tesla, home of its physical headquarters? The public vote is unequivocally in favor of Tesla. Tesla will move immediately to hold a shareholder vote to transfer state of incorporation to Texas. By the way, whatever is happening right now in Delaware with this ruling will probably also affect other companies out there, other companies that have incorporated in Delaware, because it was a state that was very, very welcoming for big companies. If that changes, could hurt that state. Now, we also got some comments from Charles Elson, a corporate governance expert at the University of Delaware. He says, rarely, if ever, does a Delaware court rescind a compensation agreement. To my memory, it hasn't happened. The board can appeal the decision to the Delaware Supreme Court. If the board ends up negotiating a new compensation package, the directors involved are going to be highly scrutinized, and it could be very hard for them to give Musk what he wants. And this is basically what the judge ruled against Elon and Tesla. The process for coming up with Elon's compensation plan wasn't independent because Elon controlled the board and the directors who approved the plan weren't truly independent. Further, the shareholders who approved the compensation plan weren't made aware of this controlled relationship. Hence, the $55.8 billion compensation plan is voided. Now, to me, this sounds like an insult to shareholders. This basically says that shareholders are idiots. They voted yes because they didn't really know what the heck was happening. If there was a shareholder vote and shareholders voted for it, why is it possible that a judge suddenly says, no, the shareholders didn't know what they were doing, the vote doesn't count, and so we rescind it all? Because, by the way, excluding the vote by Elon Musk and his brother Kimball, the measure passed by about 73% of votes cast. If you include the Musk vote, the award passed with about 80% support. So the vast majority of Tesla shareholders supported this compensation plan. But no, the judge says, no, it isn't fair. Now, it is important to note that it was rescinded and not cancelled. The difference is basically that it puts everything and everyone back to 2018. By the way, the $55 billion have not been paid out yet. Imagine if it did, that would have been a bigger issue. Now, since it is rescinded, it allows them to basically make a new decision or carry on with the same thing that happened before. But since we've now known the reason for the ruling, I don't think the same decision can be made. So the court basically found that Elon had too much control, and so the package wasn't fair. The amount was much bigger than other CEOs, which is also something strange because back then, Tesla shareholders approved the CEO's $2.6 billion compensation plan. Just because Tesla has been a huge success, did that number grow into $55 billion? But again, the shareholders gained from the fact that Tesla has become so successful. And so comparing it to, other CEOs didn't get that much money, well, I don't think other CEOs needed to reach such milestones to get paid. And other CEOs also get paid a salary. So again, this whole thing is very, very strange. I do believe he's going to get a new compensation package, including that one of 2018. They will have to address all the issues that the judge mentioned, and then probably also incorporate a new compensation package from right now until, another 10 years. Now, before I continue, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. And thank you to the 2 new members of this channel. Really appreciate your support. Now, before going into the China numbers, Tesla slashed the prices of Model Y in Canada, which means it is now eligible to the $12,000 rebate in Quebec. So they cut the prices in Canada by around $4,000 for the Model Y. Now you might say, this is going to hurt EPS. Canadian market, especially with regards to Model Y, is very, very small compared to the overall revenue and profits for Tesla worldwide. So no, I don't think this is going to affect EPS that much. Then moving on to China, Tesla Chen announced that Tesla China has launched Model Y hardware 4. Maybe we're getting closer to a launch of FSD beta in China. As for the Tesla weekly insured numbers for the week of January 22 to 28, there were 12,800 Tesla insurance registrations. The quarter is now up 28.1% up quarter over quarter. Year to date, it is up over 37% year over year, and it's the highest 4th week of a quarter ever. As for the model mix, 3,100 Model 3s and 9,700 Model Ys. Now moving into Europe, we have some sales numbers from January from a couple of countries here. Spain reported 1,094 Tesla sales in January. 67% of those were Model Ys, 31% were Model 3. As for Norway, they reported 1,109 Tesla sales and 21.7% market share for January. Tesla is the best-selling brand, Model Y best-selling car. The split here is 87% Model Y and 13% Model 3. As for Belgium, they reported 1,826 Tesla sales and 3.9% market share for January. Market share is 23% higher than the trailing 3 months average of 3.2%. This is the best January ever. Then as for France, they reported 3,118 Tesla sales and 2.6% market share for January. 47% were Model Ys and 52% were Model 3s. And this was also the best January ever. Then we've got Piloli here with a nice little overview of the rest of the countries for January. So it was the best January ever in every country except for Taiwan. Total sales of 60,700, that's up 73% from last year. Here is the list, you can pause the screen. Now, of course, there are still some numbers out of Germany and the UK that are supposed to come out. 2 huge markets for Tesla back in 2023. Those countries did not perform as well as all the others on that list, but so far, so good for 2024. Now, purely looking at Tesla and its valuation, it currently has a market cap of under $600 billion with a forward PE of 58.4 times. If we look at those metrics, forward PE, EV to EBITDA, price to sales, and price to free cash flow in the last 12 months were all under the 5-year mean. Of course, before, the company was growing much faster than what it is today, and so I wouldn't be surprised if we see even more weakness in the stock, because previously you got a high valuation. That was because the company was growing extremely fast, top and bottom line. Right now, 2024 is expected to be a year of barely no growth, let's call it. But moving forward, yes, growth is supposed to reaccelerate in 2025 and onwards. And then lastly here, the graph is on the weekly. RSI is low but not oversold. On the daily, we are still oversold, by the way. Now the stock is at $187.5, a bit in nowhere's land. Yes, we did finish the week with a weekly green candle here. The 200-day moving average sits at around $229. The 51 sits at $220, and the 20-day moving average sits a bit closer to $205, $206. There's still a downtrend here for the stock, as you can see, back at 285, 270, and 255. All of those were, of course, heavily rejected, went under the moving averages. Right now, I think the stock, to be honest, it's a bit in nowhere's land. And so let's see what happens with regards to the stock. If we get better opportunities to buy shares of this excellent company, so be it. The lower it goes, the better the opportunity, in my opinion, because I do still think that it is early days for Tesla. I think we are now in a phase of heavy investing. Yes, the business itself right now, I may say it's a bit struggling, but the macro environment isn't helping at all. Once rates come down, once the economy becomes a bit better, I think we're going to see growth reaccelerate quite fast, top and bottom line, plus the launches of the new models, maybe some FSD, energy side of the business still accelerating quite fast. You got the Tesla bot, although I think revenue for that is for later in this decade, but I do still think that it has quite a lot of levers to pull to reaccelerate growth and profits. So that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, give it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.